Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 4th of July. Now, let's just have a look what's going through the market here at the moment. Now, once again, if people are sort of confused with what's going on, check out the overall analysis. There's not a hell of a lot going on. Now, what we are seeing just at the moment in the Asian session is we had some Aussie retail sales figures out, which were slightly weaker, but there's some positive news that you can't see. There's a fiscal reform coming through from the government, which will pump in, a huge amount of cash into consumers' hands. That could get things moving as well. But what we're seeing on the actual, the main catalyst, though, I think with the Aussie and Kiwi is the yuan, offshore yuan. It's sort of rallied about 100 points. Now going down, this is the dollar against the yuan, so just make sure you understand that. So that's sort of moving down. That pushes the Aussie and Kiwi up, and that's giving us a little bit of bias there. So the Aussie has been sort of pushing to the top side. The overall sentiment, combined sentiment from the Fed and the RBA is neutral because both of them are negative. So will this break last? Well, I don't know, but I tell you what, the US non-farm payrolls will go a long way to determining whether that goes up or down. So I'm not sort of falling in love with getting long at the Aussie at this point. Here's the general charts just to give you a bit of a look through my technical setup. So the Aussie, as you can see, just breaking higher there. Kiwi's not far off, kicking into gear. Once again, I think traders are going to really wait for the non-farm payrolls to get into this. And the rest of the currencies are just waiting. But we have got pretty good trend lines. Keep a very close eye on this trend line support here in dollar yen. It's going to figure quite a lot come Friday. And you've just got, Brexit, sterling, that's enough said there. But euro just treading sideways. I thought we might have even get a little bit of a move on the downside in euro with Christine Lagarde getting appointed the ECB president. I think that's like a bad call, right, really. I mean, not that I'm against Christine. It's just if you've got no central bank experience, putting someone in charge of one of the biggest zones with no prior experience when it's absolutely at its worst possible state, that's a recipe for disaster. I think it's more no one wanted to do the job and put her in charge, throw her under the bus, and everyone can walk away. Now, dollar CAD, bucking the oil trend. Oil's rallied back a bit, but it is still moving to the downside. And obviously, as we come into like today's trading, understand US holidays, there will be very little liquidity coming into the trade day. Like if it was Friday, we've got really good setups here for dollar CAD and US non-farms, especially with dollar CAD really kicking the gear here with downward sentiment, okay? The overall bias from the central banks is down and it's broken down on all time frames. The only thing that would make it really good is if oil started rallying, then you're going to really see a good move. But we're going to wait till Friday. Now, as I said, US holiday today. The things can happen geopolitically specifically, but there's no major data to sort of rush towards. So don't get yourself all bent out of shape and start to try and make $1 million when it's a US holiday. It's usually not a good situation to be trading. And that's it. There's no sugarcoating these markets. They are tricky at the moment, and it's because we're missing the key data. We have started a new month, new data. It starts with the non-farms. So you know what? This is where the action will come from. Wait for this is my opinion, is the best thing to do. If you're trading through that North American session today, prepared for some probably volatile markets with very little liquidity out there. All right, guys, that's it from me. Have a good trade day. Cheerio.